Hello traders and investors, welcome back to the Trend Trader channel. Once again, we are looking at the most anticipated earnings release that we will be seeing in the upcoming week. As you can see from the list of these companies, it is a lot of companies. We're definitely not gonna cover each and every company. We're gonna be covering a few names. Since it's gonna be a lot of companies, if you're interested in a specific company, just use a timestamp to go and look for that analysis of that particular company. Before we start, I would like to ask those who haven't subscribed to please consider subscribing, and if you find value in this video, please make sure that you smash the like button. As always, if you have any comments or suggestions, please leave them in the comment section. So, of the companies that we're gonna be looking at, you can see that it spans the whole week. Some companies will report before the US market open. Some will report after the market has closed. Let us begin by looking at C. What we'll be doing basically, because we cannot predict how the earnings are going to look like for the company, we're simply going to be looking for trading opportunities based on technical analysis. We know that whenever the earnings come, there's always going to be a different direction in the market. Some market participant will interpret the earnings either with a positive or negative sentiment, and they will act based on the result themselves and the sentiment, and that can push the price either up or down. So we are always looking for opportunities based on that. So the first stock that we're going to be looking at is C Limited. What we see from this company, it has been on a downtrend for quite some time. What is not clear is whether this stock has bottomed here around $34. And then what we see now, the stock has attempted to rally up there, breaking above a key moving average. So now this particular stock has our interest because it is now trading above this key moving average, and you can see that a breakout happened with an above average volume. So if C Limited wasn't a reporting result, we would consider buying this company without worrying about the earnings report. However, because the earnings report are coming, so we'll want to see how it is going to react or to behave. But based on this chart alone, you can see that this is a consolidation level. So if you did not buy last week or before Friday close, if you buy at this level, then you need to have your stop loss just below this breakout level here. So it is the same thing that you're gonna be looking for when C Limited come up with their result. We'll want to see before market open if the share price is going to trade above $51 per share there, then we will be interested in taking a long position. Remember, one of the reasons why we use a stop loss is because a breakout can look promising, but it can fail. You can see here there was this breakout that happened with a nice amount of volume there, but the share price, after trading above the key level for a while, it then broke below that level. So that was somewhere around $62, and then the stock lost about half of the share price if you had entered at this level. So it is important that you also consider risk management whenever you take a position. So that's it for C Limited. So now let us move on to GitLab. It is also one of the stock that people have been talking about in the trading circle. So it's a stock that came in an IPO somewhere around November 2021. So it hasn't traded a lot, but you can see it formed this nice base here. And then since just before the end of 2023, it started to trade above that key level with convincing. You can see the moving average. It's also pointing up to show that there's an upward momentum. So now how we would trade this stock, you can see there's this high here just below $81. So it looks like the stock is consolidating around this level. So if we are expecting the news to come up positive, we can set a buy stop order just above this level. We will say maybe it's an $80.50, so that if the share price push up there, breaking above this level, then we can get a nice entry level there. And also, if we buy a breakout level here, we wouldn't want to have our stop loss below this level, but we'll want our stop loss to be just below that breakout level, because then that will give us a nice risk to reward level. So we will be considering buying a GitLab if it breaks above somewhere around $80.50. So it is one of those beautiful setup that we see today. And then we're also gonna be looking at NIO. NIO is an EV maker. We can see that the stock has been struggling for quite some time now. So there were glory days for NIO where it just traded up, coming all the way to just below $1. And then it reached a top somewhere around $60 or so. So that was around 2021, and unfortunately the stock has been trading downward for quite some time. So what we noted from this stock, we looked at that IPO level. We saw that the stock, it came to test that IPO level. As you can see, it is a potential support level, but you can already see that the stock is below that support level. We saw with other EV manufacturers, I think it was Fisker or something like that, but also Rivian, it is not doing well. However, we saw with Li Auto, they came out with their result, the stock gapped up. So that shows that earnings report can be full of surprises. So looking at NIO, we don't have interest at NIO at this moment. By interest, I mean we don't have a position. It is just a stock that we are looking at. So depending on how the news are going to come, if the news are positive, they have more deliveries, they are making money for quite some time. NIO has been burning money, so the chances of them making money are sort of slim. But you can expect the share price of NIO at least to rally and to meet this moving average somewhere here, as it is will be going down. So we can say that we might expect a bit of a resistance level around $6.80. That is if the company comes up with positive news and people are excited to push the share price higher. However, we're looking at this potential support level just above $5 per share. If NIO comes with news that are interpreted as negative, then we can expect the share price of NIO to fall below that level there. So we know that a lot of investors would prefer that NIO stay above $5.40, because maybe then the stock can potentially recover. So we'll see how NIO is going to behave when their results are coming out. Then for the people that have interest in supermarkets or similar kind of companies, we also gonna be looking at Target. So other people, they hold these companies for dividends. We can see that Target managed to break above this level with a nice decent amount of volume. The momentum is growing there. It looks beautiful. So there are all these other previous levels here where we expect the stock to have a bit of a resistance level there However, again, if the news they come up with positive earnings, growing revenue, growing earnings per share, then the share price can continue to push further up there. Like I said, other people, they consider these kind of companies just for dividends. So if you are that kind of an investor or trader, it is a company that is you can consider looking at. Even if you look at the previous weeks, you can see that there was a nice couple of green candles there, showing that investors are accumulating this stock. Whenever stock is under accumulation and maybe there is a nice fundamental news, then you can expect an above average volume there if there is a breakout. So it is one of those companies that you can look into. And then we're gonna look at Crowdstrike. So it is listed in Nasdaq. We know that most of the tech companies, we saw Nasdaq, it has performed well. Even here, we don't even need to look at the indicator. We can just look at the price action itself, because sometimes people get confused whenever they look at indicators. We know that indicators are lagging, so they take some time to respond. So if you go back, look at the history of Crowdstrike, it broke above this level here. So after breaking above this level, it traded up and then started to consolidate again before breaking above this level. After breaking above this level, it has been going up with different sides of consolidation throughout this move. It's a nice sharp move. You can see there's a nice momentum. The stock moved from around $129. It is currently trading at $314. I know other people would say they would have preferred to buy it at the very bottom, but not a lot of people can manage to buy a stock at that very bottom. I mean, even if you bought at 180, you would have already doubled your money at 260. So where to from here? As we shown you, the stock is under a nice upward momentum. It can also be very difficult to get a nice entry point, but you can consider going to a lower time frame. We see here the stock has been trying to break above this price level here. So this is our new consolidation area here. So if the stock breaks above this level here, then we can definitely consider buying that stock. Like I said, you can dial down to a lower time frame so that you can identify that level. We are looking at the weekly time frame. If you go down to a daily time frame, then that level becomes a bit clearer. So you can see that the share price is just below that 340 level here. The stock is just below this 340 level, so that is where you can set a buy stop order, so that if the share price breaks above this level with a high amount of volume, by a high amount of volume we are meaning a volume that is above average, similar to this one, then you can then track that stock as it tries to continue to move further up. Remember, here we are doing a lot of technical analysis, so you can use technical analysis and include other things that you understand in terms of fundamental analysis, what you understand about the company, to make up a story to justify holding a particular company. So now let us move to JD.com. We know some of these companies that are trading in Asia. Some people feel negative towards these companies for whatever reason they have, but based on technical analysis, we can clearly see that the stock is in a downtrend. Even if it comes with a positive news, it can try to move up there. Then we can anticipate a bit of a resistance around this level here at $26.50. Also, this level, it coincides with this potential resistance level here, so there's going to be that confluence there. So if it comes with positive result, it rallies up. Expect to see a bit of resistance around $27-28. Only after the stock break above this level, then we would consider buying this company. At this moment, we're just gonna leave it as it is. Obviously, it can perform way much better than what we expect to see, but this is just the view that we have at this moment for this particular company. Then there's another company that has performed in a similar manner to Nvidia, that is ANF. I'm not gonna call the whole name, but this is the full name of this company. In terms of technical, you can see the stock has had a very strong upward momentum. We don't have this position in our portfolio. We missed it. We don't even know how we missed it. It happens. So just maybe to study the chart a bit, because remember, what you see from one particular chart can be reproducible in other companies. You can see the stock, it broke above this level after this breakout that happened just before year 2023. The stock, it broke above this level, it came back to retest this level. If you missed that breakout, this was another opportunity to buy the stock as it broke above this level, somewhere around $25 per share. And since then, the stock has had a nice positive run there. As you can see, it looks like a very nice uptrend. So if you buy this company, well, you can't expect the stock to just keep on continuing to move further up in a linear manner. Obviously, there's nothing that can stop the stock from doing that. However, that is just too big of an expectation. So in terms of risk management, the stock is far from an ideal entry point. So if you take that stock, then you really need to consider that risk. Just to use the moving average as an example, if you were to set your stop loss here at this moving average, you can already see the gap from $131 to about $85. So that is about a $50 gap there. So in our view, this is just too much of a risk, but in terms of the company can still continue to do very well. So we'll see how that company is going to behave when the earnings they come out. And then one of our favorite companies is Broadcom. We've been trading this company since the breakout that happened around June 2023. So as you can see, we bought the breakout here, even though we did mismanaged our position, but you can see the stock was already trading somewhere around $650 per share, and then on Friday it closed somewhere just below 1,400 US dollars. Basically, the stock has doubled. We know whenever we talk about share price, some people will look at 670 and say that the stock is expensive, and then the stock can still double up in price. Again, this is a nice template to study previous winners, and then to see how you could have traded the stock. Obviously, this would have been an ideal breakout point following a breakout from that previous resistance level. Then there was a bit of a consolidation here as the buyers and sellers were trying to digest that move, and then there was another breakout that happened in here around just below 900 US dollars, and since then the stock has been moving up, even though here, if you zoom down, there was also another consolidation level. So last week the stock had a nice breakout there. So now it will be interesting to see how Broadcom is going to behave when the results are coming out. Remember, this is a tech company. Previously, the stock had reported good earnings per share, good sales. So those were all positive things that we saw with Broadcom. We won't be surprised if in terms of fundamentals, it continue with the positive momentum in there. That is most likely going to continue to push the share price further up. So for people who had the share price, or who had the stock for quite some time, then they can expect to continue to enjoy that right there. So that is all that we can say with Broadcom. And then let us look at Marvell Technologies. Again, what we see here, we can just easily see this previous high somewhere around $88. So this is going to be an area of value for us. So we can just plot something. Let's see here. We can use a potential resistance level here. So around $91, this is going to be our area of interest. So what do we mean by that? No matter how the results are going to be, the share price can continue to push further up there. We won't try to catch the move from here, $77 to about $90 there, but what we're interested in is how the stock is going to behave around this level. Remember, sometimes when a stock is approaching a resistance level, certain things can happen. The stock can go up real quick and then break above that level. That is scenario number one. Another scenario is that the stock can come to this level, consolidate around this level. Once it creates that consolidation, then we expect it to break out on the upside. So this is normally for us an ideal scenario, because scenario number one, it happens too fast. You can easily miss that move. But scenario number two is an ideal scenario for us, where there's that consolidation. So it is going to be the same thing that we'll be looking at for Marvell Technologies. You can see here there was also that consolidation before the breakout happened in there. So we will be keeping Marvell Technologies on a watch list. We won't act until we see how it performs. So now let us move to DocuSign. In terms of fundamentals, things are a bit tricky, because we saw, do people still want to sign their documents using digital signatures? However, they're gonna sign it, and if the company has the right mode for this particular business, like if they have an advantage to other softwares that people can use for digital signatures. But putting fundamentals aside and looking at purely technical analysis, we can see the stock, it found support on this key moving average after this nice breakout just before the year end of 2023, beginning of 2024. So now if you missed this entry point, buying here would have been an ideal level if you take the earnings report aside. Unfortunately, we can't take the earnings report aside because the earnings are coming. So now if you are not in the position already, this is the level to pay attention to, around $63. Again, it is the similar case with what we saw with Marvell. What we want to see, how DocuSign is going to behave when the result they come. Remember, you can predict where the stock is going to go, or you can react where the stock is going, because you already planned your trade. In this case, we're saying that we want to see what happens around $63, so we don't need to rush and buy at $54. We just you can have a buy stop order above $63, so that if the share price push up and break above this level, our long position is triggered. Then we can enjoy the ride as the share price continue to go up. However, if the company comes up with a not so good result, then we can also expect that the share price can break below $47 there. If it breaks below $47, then this is the level to keep an eye to, because if it breaks down, the share price can easily come to test this position in there. So whenever you are planning a trade, you don't just go and say for sure, definitely this particular company is going to do 1, 2, 3. The company is not always going to do that. The company is going to do whatever in terms of share price. There are fundamentals that drives the stock, but there is also the historical chart patterns and the perception that a market participant have on that particular company. So there is no need for you to rush into taking a position, but you can study the chart and then identify your potential trade levels and then act on those. And then lastly, we are going to be looking at this company. This is the last chart for today. It is a Samsara Incorporation. The share code is IOT. So what other things that are interesting about the company? It is also a new chart. It's a new company. You can see the IPO came around late 2021, early 2022. And then another thing that we see from this particular company, besides that, we can see that it is near a nice consolidation level here. You can see that it is a previous breakout from this previous resistance level there. The share price is around $35 per share. Again, we're not going to predict if the stock is going to break above, but certain things that you need to pay attention to. If you look at last week's trading action, there were some buyers pushing the share price up. The stock is trading near that breakout level. Remember, I said if a stock moves up, then it starts to consolidate before there is that breakout on the upside. So where the stock or the share price it is currently at, it is near that potential breakout level. You're hearing me, I'm saying potential because nothing is guaranteed. The share price can still come back to retest this support level. So again, you should always plan your trades. Don't be in a rush. Just wait for the market to direct you where the share price is going to go. So in this case, we are anticipating a breakout on the upside. So the best way to anticipate that is to have a buy stop order, because the buy stop order, we wait for the price to confirm that it is moving in the upward direction, and then only our trade is going to be triggered. If you just buy here and then the share price decides to break or to continue to move with the downward momentum, then you start to see a loss in your position. So it is better to be patient and to wait. So in summary, we're seeing this nice consolidation. We are anticipating a breakout, then we will have a buy stop order above this level in anticipation that the share price is going to continue to move further up. So that's it for today. If you found value in this video, please make sure that you smash the like button. If you haven't subscribed, please consider subscribing. So that's it. We'll see you in the next video.